California real estate buyers and sellers. This video covers what you must know about the California Residential Purchase Agreement contingencies if you want to avoid pain, frustration, and financial loss. So let's get to it. If you're thinking about buying or selling a home in Marin County, shoot me an email because I'd love to help people just like you make a smart move. Let's talk about contingencies. Understanding how contingencies work in the California Real Estate Purchase Agreement is super important for home buyers and home sellers, and not understanding them can leave both buyers and sellers with a lot of heartache and a loss of money. However, the topic of contingencies is quite big, so I'm going to break up what I have to say about contingencies into two videos. And frankly, you're more likely to completely understand everything about contingencies with me breaking it down into the parts, because it's complicated. This video is going to be the more general one. I'm going to explain what contingencies are and how they work for home buyers and home sellers who are utilizing the California Residential Purchase Agreement, which is nearly everyone who is buying or selling real estate in California. What is a contingency? Contingencies in real estate agreements are meant to protect home buyers from a circumstance which is possible but cannot be completely predicted with certainty. For example, consider a loan contingency. A buyer may have all of their loan paperwork in with the lender, but since the lender likely won't fully underwrite the buyer until the buyer has a specific home to buy, the buyer will enter a contract to buy a home before they know with complete certainty that they will be able to secure their loan. Therefore, by putting a loan contingency in their buyer agreement, the buyer is saying, I agree to purchase your home, but my agreement is contingent on my ability to secure my loan. If my loan doesn't come through, I likely won't be buying the home. There are three primary contingencies in our California Residential Purchase Agreement: the loan contingency, the appraisal contingency, and the investigation of property contingency, which is often referred to as the inspection contingency, but it's a lot more than that. My next video will cover that in depth. And by the way, there can be other contingencies in these agreements as well, such as a contingency for the buyer to sell their home first, but those don't come up as often, so I'm sticking to these three, which come up in almost every single contract. Anyway, each one of these contingencies is meant to protect home buyers. To get these protections, home buyers state a number of days in their California Residential Purchase Agreement that they need to perform actions that will lead them to releasing these contingencies. For example, a home buyer may state that they need 14 days in order to do investigation of property due diligence. That will give them 14 days to get inspections of the house, to find out how much it will cost to have homeowners insurance, which will include their fire insurance that is not always easy to secure anymore. And it gives them time to basically make sure that they still want to buy the house for just about any reason. There are two very important things to understand about these contingencies. First, they protect the home buyer from losing their earnest money deposit if they decide they don't want to buy the house. That is, if a buyer finds out during their stated contingency period that they no longer want to buy the house for the stated contingency reason, then they can get out of the contract and receive their earnest money deposit back. In Marin County, earnest money deposits are generally 3% of the purchase price, and therefore it is a substantial amount of money to have at risk if the buyer decides they don't want to continue with the home contract. On the other hand, if a buyer has waived their contingencies, meaning they have put in the contract that they need 0 days for a contingency, or they have already released their contingencies, and then they decide they no longer want to buy the house, then they likely will lose their earnest money deposit. Therefore, contingencies are key for home buyers to be able to discover things unknown when they entered the contract and still back out of their contract and get their money back. The second important thing about contingencies that you need to understand is how they are released. Home buyers should be very happy to know that contingencies do not expire on the date that they defined in their California residential purchase agreement. So, if a buyer states that they need 5 days to secure their loan, the contingency doesn't just expire on the 5th day and make it so they would lose their deposit if the loan doesn't come through. Instead, contingencies must be released in a writing. If a home buyer has not provided a writing to release their contingencies, the seller's agent will reach out to the buyer's agents with a demand for performance of releasing the applicable contingency. And that comes in a writing as well. And guess what? When that happens, buyers have 3 more days to release their contingencies. So the only time a contingency actually ends on the date that the buyer put in their California residential purchase agreement is when a seller's agent sends the buyer's agent a duty to perform the release of contingencies at least 3 days before the contingencies are actually due, which then makes the said contingency due on the day that was stated in the contract. In my experience, I have never had that happen. No listing agent has sent out the duty to perform 3 days before the actual contingency was due. So in all practicality, in Marin County at least, buyers generally have 3 more days than they state in their agreement to completely release their contingencies. 3 days can be a long time when the stated contingencies are quite short. Now, how does the situation of a buyer needing more time to comfortably release a contingency usually work in the real world? In Marin County, a great buyer's agent can buy their home buyer extra contingency time by fostering a good working relationship with the seller's agent. By doing so, the buyer's agent can communicate any additional time needs as they arise, and most sellers will agree to that extension of needed contingency time. Why? Because once a home is in contract, it's normal for the sellers to start moving on with the next chapter of their lives, whether that's preparing to move, or it's removing staging, or getting ready to spend the money earned. The seller's heads shift, and that gives power to buyers. As long as sellers aren't angered with last-minute buyer demands, they are most likely to kindly agree to a few extra days for the buyers to complete their needs. Outside of angering a seller, the only time it is generally not easy to get an extension of time for your contingencies is when the seller remains in control because they have a great backup offer, especially one with a higher price that came in after the seller went into contract with the original buyer. That seller control existed a lot more when our market was super hot. But now, even if there were other buyers originally interested in the property, those buyers usually move on after the home is in contract. Okay, now that you understand the basics about contingencies, in the next video, I'll discuss the pitfalls of each contingency. And there are some hidden pitfalls. Hit the bell notifications to be notified when I drop that next video. Have a great day.